Hello and welcome back to Kitco Mining with me, Paul Harris. Today I'm joined by Greg Smith, President and CEO of Equinox Gold. Greg, welcome to Kitco.
Thanks, Paul.
Now, Equinox, you've just reported your third quarter results for the September quarter. Production jumped 42% compared with the June quarter as your Greenstone project in Ontario came into production. Greg, how is the ramp up of Greenstone going?
It's been going well, Paul. I would say maybe a little slower than we originally anticipated, but consistently making progress in the right direction. And, really focused on increasing the mining rates, increasing the mill throughput, and ideally getting up to full capacity sometime in Q1 next year.
And how transformative will Greenstone be for the company?
It's huge for us. I mean, it's going to be our largest, longest life and lowest cost asset. It's in Canada. There's lots of potential at Greenstone. So this is a real game changer for the company, and you can really see it already in our Q3 results. Wasn't commercially producing in Q3, already produced $65 million in operating cash flow, and was our lowest cost producer in the third quarter. So we're already seeing that in our financial results. Most operating cash flow we've had in a quarter, highest EBITDA we've had in a quarter, adjusted EBITDA we've had in a quarter to date. So we're seeing it already, and it's just going to get better from here as we ramp that mine up to full production.
There's been investors have had a big focus on costs, and looking at the third quarter results across the board, all-in sustaining costs continue to rise. With a big mine coming on stream and into commercial production like Greenstone, what will that do to your all-in sustaining costs?
Well, Greenstone will make up not quite half, but almost half of our production when it's up to full capacity. And because it's our lowest cost producer, it's going to drag down our average cash cost per ounce and all-in sustaining cost per ounce. But we're also focused on our other assets, Paul. We have an asset optimization program that we implemented about a year and a half ago. And we remain focused on managing and ideally reducing the costs at our other assets, both from increasing production and also just being more efficient in the operations. It's been a challenge. We had a lot of inflation in sort of 2021, 2022 that almost reflated a lot of operating costs for mining companies, but it is something we're focused on at Equinox.
Well, what are the things you think you can address and bring down and trim?
You can start on the production side. It's increasing the availability of your equipment, being more efficient in your mine, focusing on your mine plans to increase throughput, increase grade, and ultimately increase your production, which increases the denominator that those costs are applied to. And then on the fixed cost side, it's looking at everything from headcount to, IT, to maintenance, to everything that we do around the mines and ways to do it more efficiently. And we have seen good improvements in our mines. It doesn't always seem to reflect in our all-in sustaining cost per ounce, at least not yet, but they're making good progress in a lot of areas.
Now, throughout the history of Equinox Gold, you've pretty much been in growth mode. With the completion of Greenstone, are you sort of taking a breather now? I know you've got some expansions to come down the line. Are you taking a breather now, or are you still in growth mode?
Well, we've been really focused over the last, better part of 3 years in getting Greenstone to where it is today. I think we'd like to get it ramped up and start to see the benefit of having a mine of this scale in our portfolio. We did use debt to both build Greenstone and acquire the other 40% we didn't own. We'd like to deleverage a little bit over the coming year. So I wouldn't say we're out of growth mode. I mean, mining companies always have to be on the lookout for opportunities, but I think our focus would be on our own portfolio and taking advantage of now having a mine like Greenstone in that portfolio.
Now, you mentioned debt. You've been paying down debt in the last couple of quarters, ending the quarter with just over $1 billion of long-term debt. What is the sort of capital allocation strategy going forward? How quickly do you want to bring that debt down?
Yeah, I think we're gonna focus on two things: debt repayment, and by that I mean parking as much cash as we can on a revolving credit facility. Where interest rates are today, if you're in that 9% range, you're making 9 cents on the dollar that you park on the facility. So it's a good use of capital in the near term to both deleverage and reduce our overall interest costs. We'll also look at terming out some of our existing debt and just having a more responsible, or I guess, more systematic maturity ladder of that debt over time. But I think it's fair to say I'm a chartered accountant by trade. I've been in the mining industry my whole career. I don't like to have a whole lot of leverage on the balance sheet. So reducing that overall debt will be a focus of the company, certainly in 2025 and into 2026.
Now, looking at the overall Q3 results, there's, I think, about $800 million were returned to shareholders in the gold sector, bringing the total for the year up to around $4 billion. At what point will you feel comfortable looking at a capital return strategy, Greg?
Yeah, it's always something that we talk about internally here, whether it's through dividends or share buybacks. When you look at all the opportunities to use your capital, whether it's paying down debt, whether it's investing in your current assets, or whether it's returning it to shareholders, you balance that against each other. I think where we are today, because of our leverage, we'd like to focus there. We do have some growth opportunities in the company that could come up over the next few years. I think we want to be prepared to execute on those if it makes sense in the moment. But ultimately, longer term, we do want to have a capital return to shareholders policy of some kind, whether that would be dividends, and I'm sure it would include a dividend, and of course, share buybacks over time.
Now, Equinox Gold is a company that was built on M&A, mergers and acquisitions. It sounds like you're still looking. Do you still see attractive targets out there?
It's a tough question. There are interesting targets out there, whether or not those are targets that are available to a company like Equinox today, or whether it's something we would pursue today is another question. You always have to be looking in our space to replace reserves and resources and secure the long-term sustainability of your company. So we're always open-minded. I would say at this stage, it would have to be an opportunity to be very compelling for us to do anything. Again, we've just brought Greenstone into commercial production. We're still ramping up. We'd like to see some of that start to manifest in our share price. And of course, we'd like to deleverage in the near term. And, once we get that a little more advanced in that, I think we'd be open-minded again for the right opportunity. But I will say they're sort of few and far between out there. There's not a whole lot. And the best ones are obviously going to be ones that people are going to compete for.
Now, with Greenstone being such a cornerstone, important asset, does that, I imagine that raises the bar for any potential future transactions, whether that's M&A or even internal growth. How does that change let's say, your portfolio management attitude? Because I imagine there's assets now in your portfolio, the smaller ones perhaps, that are no longer fit now that you're at a company with the Greenstone type of assets in your portfolio.
I mean, the easy answer is you'd love to have bigger, longer life, fewer mines, right? And that's much easier said than done in our industry. We've been successful in obtaining an asset like Greenstone, and within our portfolio, we have some other assets that could fit that bill, including our Castle Mountain mine in California, or I call it a development project. I guess generally, Paul, I'd say we've always been open-minded on our portfolio. We've sold mines, we've sold projects as we've acquired mines. And I don't think that philosophy will change, but it's opportunistic, right? You want to do it at the right time at valuations that make sense. We're in no hurry to do anything, but of course, if opportunities arise, again, we're open-minded and commercial to those types of transactions.
The valuations of exploration companies and developers have been, suppressed or low for quite a number of months or quarters. Are you surprised there hasn't been more M&A activity?
Yeah, I think we'll see it. With the gold price where it is, I think a lot of the mid-tier and larger companies are going to start to make a fair bit of cash flow. And if we can manage costs correctly, that's something that will start to appear on the balance sheets of company and give them some more firepower to acquire more earlier stage assets. For us, we've got a fair bit of internal growth in the company already. And so again, it would have to be something that we thought really made sense for us to pursue. But I do think we will see that, Paul. It's kind of inevitable. If the bigger companies are making sufficient cash flow and have that flexibility to start investing again in the junior space, acquiring in the junior space, they're going to have to do it. I mean, ultimately, these companies do need to replace reserves. It's going to happen. It's just a matter of when. Okay.
Now, Equinox Gold, your share price has been pretty flat for the year. What do you think it will take for that to turn around? What are investors wanting to see from Equinox Gold?
Well, I think getting Greenstone ramped up to capacity, demonstrating that we're able to generate sufficient cash flows to start deleveraging, and then consistently meeting our production targets over time. I mean, we've like you said, we've been in growth mode for a long time here. We've been building a large mine. We've got 7 operating mines today, a lot going on. And I think just getting up to a level of consistent cash flow generation and deleveraging is going to have a real effect on our share price into 2025 here. That's going to be our focus anyway. So hopefully I'm right on that.
Okay. And so your key goals for 2025, in addition to that, what are they?
Well, we've got some internal things we're working on. We're going to go underground for the first time here at Aurizona, start to build out a decline and get our hands on that underground deposit. We've got some interesting exploration programs at all of our sites, I would say. Castle Mountain in particular, we're going to be advancing the permitting and the detailed engineering for the construction of a larger mine at Castle Mountain. And of course, we're continuing to work with the local stakeholders at Los Filos towards some long-term agreements that would allow for the expansion of that mine as well. So a lot of things going on. I think 2025 will have a number of catalysts. Again, the big thing for us, and I think the big focus of the market right now, is get Greenstone up to capacity and start demonstrating the potential of that mine.
Well, I wish you the best of luck with that, Greg, and congratulations on bringing that into production. Thank you very much for joining us today.
Thanks a lot, Paul. Appreciate it.
And for our viewers, if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.